Get to some earnings. AMC this morning lower despite significantly narrowing losses in Q2, posting revenue growth and an increase in attendance. Box office hits like Minecraft, Lilo and Stitch, Sinners, and F1 bringing moviegoers back to the cinema. AMC chief Adam Aron's with us this morning to talk about the quarter and the overall industry. Adam, welcome back. Good to have you.
Good morning. You know, with all the heavy news I'm watching on your program, isn't it nice that movie theaters are booming and people can escape their daily lives and get two and a half hours movie theater?
Yes. You had a good post yesterday running through attendance revenue and food and beverage per patron. You don't think this is sort of a one-time spike?
No, I think finally, after 5 years roaming around in the wilderness after COVID, I think the movie industry is finally back. If you look at the numbers that AMC Entertainment posted yesterday, our attendance was up globally 26%. In the second quarter. Our revenues were up 36%, and there's so much operating leverage in our business. Our EBITDA was up 391% year over year. It's a pretty good day when you can quintuple your EBITDA from a year ago.
So how do you leverage this moment? Where do you put any tailwinds? Where do they get directed?
The tailwinds are the movies that are coming out from the major studios and our big partners in this whole effort, and some of the independent producers who are giving us great film product too. But when you look at the current run rate, the 12-month run rate of movies starting April 1st of this year through what we believe will be the case through March 31 of 2026, the 12-month run rate is fabulous, and the box office is going to be the biggest that it's been since COVID. Fortunately, we've made our company so much more efficient. Our profit per patron is up almost 50% since pre-COVID levels. We don't actually need the box office to come all the way back to pre-COVID levels, but we do need movies. And when you think about the movies that are coming, hello Wicked for Good at Thanksgiving, hello Avatar, Fire and Ash at Christmas, we're looking at a ton of big movies that are being released in theaters over the next actually a year and a half. Not only is 25 looking good, but all of 2026 is looking great.
Well, you're going to need to keep the momentum going after F1, which my kids have already seen 3 times in the theater, Adam. So what is it?
Sarah, speaking of F1 quickly, yeah. F1 is such a perfect example of one of the reasons why the movie industry is recovering. First, you have this transaction that was completed just last week where Skydance is taking over Paramount. Skydance has already indicated publicly it wants to double the number of movies that it releases at Paramount. F1 is a major effort from Apple. And as we know, Apple, one of the most important companies on the planet, can really add to the strength of Hollywood if it commits to movie making in a big way. And F1 was an enormous success for Apple. We expect more coming from Apple in 2026, 2027.
No, it was a big bet that paid off for them. But my question, Adam, is Happy Gilmore 2 is a streaming original. It didn't come to theaters. And so there is this sort of lurking question about whether that is a new model.
Well, it's a model, but it doesn't mean it's a model that comes at our expense. When you look at some of the biggest movies that have come out in the past decade, movies like Avatar 2, movies like Avengers Endgame, movies that gross, $2 billion worldwide. Like, Netflix was a business. I mean, the consumer's appetite for content is so voracious that streaming services and theaters can operate harmoniously together at the same time. And actually, we argue, and the facts support, that the most successful movies on streaming services are not the ones that just go to streaming services first and only, but they're the ones that go to theaters first, where there's a big theatrical release, a big global phenomenon. Then they go to the streaming services, and they're watched that much more. What was the biggest movie watched on Paramount Plus? Top Gun Maverick. Why? Because it grossed $1.5 billion in movie theaters around the world. Look, we're very content, optimistic, confident about our future. We know what movies are being released theatrically. There are a lot of them. And so streaming can be our friend. It doesn't need to be our foe.
Adam, just to get to the financial metrics, obviously you're talking very positively. The quarter was a strong one, but you still have $4 billion in debt. I know you've moved a lot of it out in terms of maturity. But, you know, for those people who bought this stock along the way and are looking for free cash flow and looking for you to be able to establish significant earnings despite that debt load, what do you tell them?
Well, first, David, first of all, hello, David. Nice to see you again. Actually, AMC has used the last 5 years since COVID to pay down a lot of debt. We have over $1 billion less debt today than we had when we entered COVID. And that's come, obviously, when the box office was depressed. There is so much operating leverage in our business. As our revenues grow, our EBITDA grows that much more. In the fourth quarter of 24, our revenue went up 18%, our EBITDA more than tripled. In this quarter we just announced, our revenues went up 36%, our EBITDA almost quintupled. The ability for us to drive EBITDA growth, which will then in turn allow us to refinance some of our debt, lower interest rates, that's all good. But look what we just pulled off in July, just last month. We just did a major refinancing of our debt, which started in July of 24 and finished in July of 25. We moved over $2.5 billion of debt from a 2026 maturity to a 2029 maturity. I think we've got our debt load capably under control. And as our EBITDA rises, our leverage level falls. And I actually, one sophisticated analyst told me, you're going to finally grow into your capital structure because you're bringing down debt, you're extending maturities, and you're growing EBITDA all at the same time.
Adam, pretty fascinating. We love talking theatrical exhibition. Good to see you again. Thanks for coming on. Adam Aron, AMC.
My pleasure.